In this video, we will learn about digital financial tools. So, in this era, in this time, we use many digital financial tools where we don't have physical money. We just transact and do our payments, right? So, digital financial tools plays a very important role in our lives. Digital banking is not new, but many people were just comfortable banking through physical channels or wanted to make sure that the digital approach still offers convenience and friendly service. Many banks offer a variety of digital tools to handle everything from paying bills and depositing checks to withdrawing cash from an ATM without needing your card or PIN. So the first one is online banking. Online banking allows you to access and manage accounts 24 hours a day. So the actual bank timing is from 10 to 3, right? But through online banking, you can do your transactions or access the bank 24 hours a day. So you can handle transactions on your own timeline while also being able to monitor closely for suspicious transactions. You can transfer funds seamlessly, set up online statements to enhance security, and pay bills without having to make a trip to the mailbox. It also enables you to be able to view past statements and download them whenever you may need. But it may not be applicable for small businesses as they need a cash flow in their everyday life. So the second one is mobile banking. So step it up another notch by downloading your bank's mobile app and enabling you to deposit checks anytime with the use of your phone's camera, saving you a trip to the branch or ATM. So you don't have to go to the bank in person to do your deposits of cash or check. So banking mobile apps provide an added layer of security by using biometric data or two-factor authentication methods in order to access accounts. So this is for the security, for the secure of your transactions. Businesses can also benefit from banking mobile apps while allow them to stay on top of cash flow in an ever-changing environment and even approve transfers, wires, and ACH payments on the go. So mobile app is the payments that you make from your mobile through the bank's application. So the third one is contactless payment. So these days you have so many cards, your debit cards, your credit cards. So these are some of the ways of the contactless payments. So they will provide you the cards, right? So you can just don't have to give the physical cash. You just can give your debit card, and with the use of your pins, you will be able to make the payments. The fourth one is smart ATMs with social distancing measures in place. So due to COVID, we had um, a lot of social distancing measures in everywhere. Many find themselves trying to avoid contact with highly trafficked areas. So we were afraid even to touch places, right? So in those times, we can use smart ATMs. Smart ATMs allow you to get your cash from a supported ATM in a safe and secure manner while making minimum contact with the machine itself. You just have to press the buttons. With just a few simple clicks to a mobile app, you can get your cash without even needing to take out your card or type in a PIN. So even a card is not needed in order to take your cash. So these are the four types, four ways you can make a contactless payments. Okay, that is through digital tools. So in order to make it more secure, we have so many ways to make it secure. So the first one is OTP and QR code. So this is one of the way to secure your transaction. So OTPs is to authenticate whether it's the right person, and the QR codes is to give you the information um, in a coded way, in a decoded way, okay, in an encoded way, and you can decode it when you scan the QR code. So that is where one time password, that is OTP, and QR code comes into play. And the second one is UPI, that is unified payment interface. So all of you are using these GPay, Amazon Pay, and Paytm, right? So in all these areas, UPI plays a main role. So you will be given a particular UPI where it can be used to make payments. And the next one is AEPS, that is Aadhaar enabled payment system. So now Aadhaar is very mandatory, and it has been connected to your bank accounts and your other government related areas, right? So and now recently they are again connecting it with your electronic your EB bills, right? So AEPS is a bank-led model which allows online interoperable financial transactions at POS, that is point of sale, or micro ATM through the business correspondent. So Bank Mitra of any bank using the Aadhaar authentication. So you can do any payments using your Aadhaar. Okay. So how to get it? How do you make use of it? Actually, this is not very much in use. So how do you make this AEPS, that is Aadhaar enabled payment system? So you have to provide the KYC, that is know your customer information, to open a new account, and Aadhaar should be linked to it. And what is required? You should have a micro ATM, and remember the Aadhaar number, and give the bank name, and you have to present yourself with the biometric, that is the fingerprints. So during the registration of your Aadhaar only, your fingerprints would have been taken. So that will be used in order to make this payment. And the next one is USSD, that is unstructured supplementary service data. So it is a global system for mobile communication protocol that is used to send text messages, and it is also similar to SMS, that is short message service. USSD uses codes made up of the character that are available on a mobile phone. A USSD message, which can be up to 182 characters long, establishes a real-time communication session between the phone and the other device. So it's also kind of a Bluetooth connection. Okay, so there you will be switching on Bluetooth, but here it is with a code from the mobile. So this will create a connection between your mobile phone and the other device, so you can make the payment. And the next one is card payment through cards, that is credit card and debit card. So this comes under contactless payment, right? So credit cards and debit cards are typically look more almost identical. They are identical, okay? So with 16-digit card number on it, and the expiration dates, and the magnetic strips, and the EVM chips, okay? So all these will be available both in the credit card as well as in the debit card. Both can make it easy and convenient to make purchases in stores or online, with one key difference. The only difference between debit card and the credit card is when you use a debit card, you use your own money. But when you use a credit card, you take a loan from the bank and you pay it later. So debit cards allow you to spend the money by drawing on funds you have deposited at the bank. Credit cards allow you to borrow money from the card issuer up to a certain limit in order to purchase items or withdraw cash. Okay, so these are some of the differences between credit card and debit card. Okay, credit card gives you access to a line of credit issued by the bank. So it is issued by the bank, while debit card will detect money from your bank account. And credit cards offer better consumer protection against fraud compared with debit card linked to a bank account. Newer debit cards offer more credit card like protection, while many credit cards no longer charge annual fees. While comparing credit cards with debit cards linked to a bank account, it's important to consider the fees and the benefits. Because while using credit card, there will be a certain amount of interest that will be again reduced when you pay the amount back. Okay. So the next one is e-wallet. So e-wallet is a type of electronic card which is used for transactions made online through a computer or a smartphone. So it's again kind of a ATM card or the credit card. Okay, its utility is same as the credit or debit card, and e-wallet needs to be linked with the individual bank account. Okay, so it has to be linked with your bank account to make payments. So the last one is POS, that is point of sale. So this is where it refers to the place where a consumer executes the payment of goods or services. So when you start using a certain app or something to pay the amount for what you have bought, okay, and where sales taxes may become payable. So that is called as POS. It can be a physical store where POS terminals and systems are used to process card payments, or a virtual sales point such as a computer or mobile electronic devices. So point of sale is mostly used in stores, okay, in commercial, okay. So that is where POS comes into play. So in this video, you have learned about the various digital financial tools and the ways how it can be secured.